Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. President Xi says China is never intimidated by bullies as the leaders of Russia and North Korea join him at a major military parade in Beijing. President Trump says that they're conspiring against the US. Global debt slump. Japanese 20-year yields hit their highest levels this century as the wave of worry over government deficits washes around the world. Plus, Chrome, sweet Chrome. Alphabet shares surge after Google avoids being forced to sell off its web browser, but is told it must share search data with its rivals. I did warn you that it could be a sour September in these markets, and so it is proving. We've had a sell-off in stocks and bonds yesterday, and the negativity continuing in the Asian session. It looks like we're going to get a bit of recovery when we look at the futures picture here in Europe and across the pond. UBS says when you get dips, buy them. But flip the board over to the cross-asset picture, because really the action was in your bond space yesterday, and you're looking at the 30-year Treasury yield flirting with that 5% level. We had long-end UK gilt yields yesterday at levels we haven't seen since 1998. That's spreading over into cable. 133 is where we trade on the pound at the moment. I have to say, they had an unexplained lie-in on the London Metal Exchange earlier. 90-minute delay to the start of trading. Wouldn't have minded a lie-in myself, but we've got gold here at fresh records because of these debt fears, but also the Fed cut bets. And we have Brent at $68 a barrel, so steadying a bit as traders pair and weigh those geopolitical risks. But speaking of which, let's get to them. Chinese President Xi Jinping appearing alongside Russia's Vladimir Putin and North Korea's Kim Jong-un at a military parade that marks 80 years since the end of World War II. In his speech, Xi called on troops to build a world-class military and defend China's sovereignty and territorial integrity.
The Chinese nation is the great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness, progress and reaction, the Chinese people rallied together to defy the enemy.
For more, Bloomberg's China correspondent Min Min Lo joins us. She's been on this story all week. Good morning, Min Min. We've heard from the US Treasury Secretary Scott Bessent. He says that the SCO summit was largely performative. So talk to us about the significance of the optics around this military parade.
Yeah, the SEO summit and the military parade back-to-back, it's really not a coincidence, right? It's to ensure that most of these guests from around the world will attend both events. There are at least 26 world leaders attending the parade. Of course, Modi is not there, which suggests that he is putting a little bit of distance from China just to maintain that strategic autonomy as it tries to negotiate for lower tariffs from Trump. But President Prabowo of Indonesia, he skipped the SEO meeting. He was supposed to come, but there was a protest back home, so that held him back. He managed to make it last minute for this parade, and it's a show of force, right? It's slightly less than the 30 political leaders that attended the last parade back in 2019, but still a good showing, especially with Putin and Kim Jong-un there as well. The three strongmen coming together, forming this show of unity that is perhaps a show of challenge towards this Western-led international order. Suddenly, they're very aligned in their worldviews in that aspect. And Kim as well is particularly notable. This is his first foray into international diplomacy since he came into power. And he's standing there alongside his two other big brothers, perhaps seeking to, revive ties with China to secure more economic and diplomatic support, potentially ahead of another round of renewed talks with President Trump, given Trump has indicated he's willing to meet with Kim Jong-un to restart nuclear talks as well.
Yeah, he seems to want to be part of the action, accusing Xi of conspiring against the US, but sending his warmest regards to the other leaders. Look, Min, when we look past the optics here, China, for example, has signed this major gas pipeline deal with Russia. Does it all just underscore how much the world has shifted this week?
Yeah, this week is such an important event, a lot of big diplomatic events for China, right? And there's so many of these world leaders here. There was a flurry of bilateral meetings. And Scott Besson said that it was performative, but it's not just that. There had been a series of pretty substantial concrete outcomes, maybe not so much on the security front. The SCO started out as a security grouping, but it's expanded into economic and trade issues as well. And you look at these deals, China and Russia signing the agreement to that gas pipeline that would vastly increase China's purchases of gas from Russia. There is the visa-free entrance for Russian people on a trial basis that China has just started, resumption of direct flight between China and India as well. There's money on the table, China pledging hundreds of millions of dollars in grants to SCO countries. They're doubling the amount of scholarships, and that is particularly significant, especially given you think about how the US is clamping down on visas for foreign workers and foreign students. So there are incremental steps to bring together these countries in many different ways, especially when it comes to trade and economic issues. And of course, it is also a display of military might, right? You look at all the cutting-edge technology that are out. There are amphibious vehicles, which if you watch the Chinese state TV commentary, they were saying that that is going to be important for the taking down of any coastal territory. And think about Taiwan. It's unsaid by the commentator, but that's probably something to keep in mind, right? If China were to reunite with Taiwan, something they want to do at some point. We don't know when, but it's, taking down Taiwan by force is always an option. And yes, perhaps that's why Trump is saying China is conspiring with Putin and with Kim against the US. But he said that this parade is not a threat to the US. He said the US has the largest and strongest military in the world, and China will not think about even starting a war with the US.
Min, excellent reporting. We thank you so much, and we'll come back to you later on in the programme. That's Bloomberg's China correspondent, Min Lo. We're staying in Asia. Let's get back to the markets, shall we? Paul Dobson, our executive editor for Asia Markets, joins us now. And Paul, it looks like Japanese bonds are joining the global bond slide.
Yeah, good morning, Lizzie. Normally, if you ask me to do a long hit talking about Japanese government bonds, I might think that everybody's in for a snooze fest, but not at the moment. A market that's been sleepy for most of the last couple of decades is really coming to life now, and that's because we're seeing ever-rising yields at the back end of the yield curve in particular, signalling a lack of demand for the Japanese government bonds. Now, there are reasons for this that are kind of universal and common across global debt markets, and there are some particular reasons why Japan is in focus at the moment and feeling that pressure. I think if you're looking at the inflation outlook globally, there are concerns about that, what tariffs will do, and inflation is toxic for government bond yields, which pay you a fixed amount every single year because that value of those payments diminishes. In Japan, it's been elevated. It's been above the central bank's target for quite a while. Deliberately, remember, Japan has had decades of no inflation whatsoever, and so they want some inflation, just not too much. We're getting to the point probably where the BOJ will be raising interest rates again, and that may hurt bonds at the short end of the yield curve as well. So some tensions there. Then there's the supply factor as well. People are worried about how much debt is being sold locally and globally. In Japan, it's particularly pertinent because the debt to GDP ratio is already extremely high. And so that means that every time they're borrowing, particularly at higher yields, it's becoming more costly for the government. And this is where the politics comes into play. The Prime Minister is under pressure. He's under pressure because the economy is creaking and people are unhappy. He's lost some of his allies within the government, which suggests that in order for him to hang on, he's going to have to loosen the purse strings and spend some more money money on social support, those kinds of things. Or if he's toppled and someone else replaces him, likely they come in and spend even more money. Neither of those are good scenarios for bonds particularly. So again, you see that pressure, the idea that there's going to be more supply coming to the market, and that's going to weigh on those yields over time. So precarious times indeed for Japan. Add into that the sort of global supply context where we're really seeing a massive wave of corporate issuance, and that puts the focus right now on an auction that's coming up in Japan, 30-year bonds tomorrow. Everyone's going to be paying a lot of attention. We haven't seen a lot of buying interest recently from the typical people that would take down that kind of security, the insurance companies, the large banks, foreign investors who see attractive yields when they put in currency hedges. So the market is worried about whether investors will show up, what the sort of demand will look like, and whether that's going to see us spiraling even higher on those yields at the back end of the curve.
All right, Paul Dobson, our executive editor for Asia Markets. We thank you for that Japanese perspective there. Let's add in the transatlantic picture as well, because, as you say, we have the yield picture higher around the world. We've also got auctions happening elsewhere, and our markets reporter Valerie Teitel has been monitoring the moves in Europe and the US. Val, a record day of issuance for Europe's bond market yesterday.
A record day of issuance. Nearly 50 billion euros was issued across the Eurozone and the UK yesterday, a flood of debt issuance in order to borrow this kind of money to make their books look solid into year end. Yesterday's big numbers were to blame by the UK government having a 10-year syndication. We also had a very large syndication from Italy. They hit the 7-year and 30-year part of the curve. Good news, Lizzie, is that there was some decent demand. The bad news, though, is that these issuers had to offer multi-year highs in yield, cycle highs in yield, in order to attract that demand. Flip the board. Let's take a look at how European yields have been faring, because across the 10-year sector, we are hovering around cycle highs. So this is a bit of push and pull when it comes to debt issuance. Yes, those issuers wanted to attract those big, juicy orders, but to do that, they have to offer some big, juicy yield, and that's what we saw in the market session yesterday, with yields rising across the curve, especially in the 30-year sector. It's led quite a global bond rout. In my mind, European yields are really the kicker for the move yesterday. We are now flirting with that 5% level when it comes to U.S. 30-year Treasury yields. 4.99 we're now breaching in the overnight session.
All right, Bloomberg's Valerie Teitel, we thank you for that look at the global bond sell-off. And meanwhile, we keep in mind the Federal Reserve. Lawyers for Federal Reserve Governor Lisa Cook have described President Trump's move to oust her as being based on nothing more than cut-and-paste allegations of mortgage fraud made in social media posts. In the latest court filings, Cook's attorney said that Trump lacked valid grounds to fire Cook for cause. Let's bring in Bloomberg's Balazs Pence for more. Balazs, we're looking at the Fed chair, the Treasury Secretary Scott Bessent, saying that interviews for the next Fed chair are going to be starting on Friday. This reported by the Wall Street Journal. And we've got an eye on Cook's legal case. Where next for that? And the crucial question, I suppose, is whether she's going to be voting at the Fed's next meeting.
Well, I'm afraid the short answer, Liz, is that we don't know. Lisa Cook has sought an emergency injunction from the judge to let her continue to work on the Fed, but the judge has given the government until Thursday to give more evidence, so it's unlikely that we'll get a ruling before the end of this week. Cook and her lawyers continue to argue that the president lacked ground to fire her, and they continue to argue that there was no case of mortgage fraud committed by Lisa Cook. So this case will continue, and this will continue to weigh on sentiment, and investors will be keeping an eye on the composition of that Fed meeting when the meeting starts on September 16th.
And meanwhile, President Trump says that his administration is going to ask the Supreme Court for an expedited ruling when it comes to tariffs. What's his plan B here, Balazs? Surely less tariff income would necessitate more US debt sales to cover the spending debt, going back to Valerie's point.
Well, I'm not sure if we're at the Plan B stage just yet. We do have a little bit of clarity, at least when it comes to the White House's legal strategy. They are going straight to the Supreme Court, where they will be hoping that a recent string of favorable decisions for the administration will continue on this case, which hinges on the president's authority to impose these tariffs using economic emergency powers, which covers the vast majority of the tariffs now in place. So this is an absolutely crucial, a pivotal case, because we're just not sure what would happen if they are found ultimately illegal. What happens to all the trade deals that have been done? What happens to the tariffs already collected? And indeed, what happens to U.S. debt financing? A lot of questions remain, and a lot of uncertainty remains in the trade world.
And Balash, while President Modi has been in Beijing holding talks with the Chinese and Russian leaders, as we were hearing from Min Min Lo, President Trump's been continuing his threats of maintaining tariffs against India. Just take a listen to this.
No, we get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world.
So where next on India tariffs then, Balash?
Well, Lizzie, I think it's really interesting that President Trump continues to engage on the topic of India tariffs, even though, as far as we know, there are currently no meaningful negotiations happening between the two countries. So perhaps this is a way of trying to kick off those negotiations. What we heard from Delhi this week is that the Commerce Minister said they're hoping to get a trade deal with the U.S. before the end of the fall. So maybe there could be some movement coming up ahead. Certainly, this is a key trade relationship. India is a large country, a large economy, and they are under a very, very onerous tariff regime right now. So it would make sense for the two sides to try to come together and solve this issue. President Trump, for one, seems to be engaged on this one.
It would make sense, but will it happen? Bloomberg's Balash Pensby, thank you so much for that update on trade and the Fed. And coming up on Daybreak Europe, we're going to take you to tech. Chrome shining for Alphabet as Google avoids the harshest sanctions in the biggest US antitrust case in decades. We'll get you the details next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, Google has dodged being forced to sell its Chrome business, though it will be required to share online search data with its rivals. This after a judge ruled in the biggest US antitrust case in almost 3 decades. Shares of the parent company Alphabet surging in extended trading. And for more, we're joined by Annabelle Drewlers, host of Bloomberg Tech Asia. She joins us now from Hong Kong. Morning, Annabelle. Just talk us through practically what actually changes for Google as a result of this ruling.
Yeah, so practically there's a few different changes here in play. The first thing and the main thing that Google is going to be barred from doing here is it can't enter into exclusive contracts for distribution. So that's the main change. What it can do, though, is that it's still allowed to pay its partners. So this is a key win for Apple because it's been receiving around $20 billion a year to make the search, to make Google the default search engine on its iPhones. Under the ruling as well, Google's going to be required to share some of its search data with competitors. So those competitors could include Microsoft, for instance, DuckDuckGo, whose CEO testified at the trial, OpenAI, Perplexity. But that data could be helpful for competitors to build out their own search engines or AI models. And then as well, the judge also ruled that Google can no longer require device makers to take all of its apps in order to access the Google Play Store on Android. So that's sort of a second modest win for the Justice Department. But still, I mean, seems to have it did fall short, really, of some expectations.
So a modest win there for the Justice Department, but how big a blow is this to the US government, Annabelle?
Yeah, it is being considered quite a large one. I mean, you mentioned there in the introduction that this is the biggest US antitrust case in almost 3 decades. What the DOJ was seeking was essentially to break apart the business. So it's obviously fallen far short of this. The DOJ is still saying that Google is being held accountable here. They put out a statement or a post on X saying that the court didn't order all of the requested relief, but they still are weighing their options as to what they do next, and also thanking the court for agreeing that there were needing to be at least some remedies for it as well. But certainly multiple Google opponents have criticised this decision for not going far enough, and I think you can see that relief as well reflected in the shares as well.
All right, Annabelle Drewl is our Asia tech correspondent and host of Bloomberg Tech Asia. We thank you so much for taking us through that. Now let's get to some other top tech stories. Apple's lead AI researcher for robotics has left to join Meta in the latest departure from the iPhone maker. Sources say that 3 more members of Apple's large language models team are also leaving, 2 to OpenAI and 1 to Anthropic. The exits follow the loss of the group's chief and raise fresh questions about Apple's AI strategy. Elsewhere, AI unicorn Anthropic has closed a $13 billion funding round, nearly tripling its valuation to $183 billion. Anthropic says that it'll use the funds to meet enterprise demand, expand globally, and advance AI safety research. And OpenAI has agreed to acquire the product testing startup StatSig for $1.1 billion in stock, one of its biggest acquisitions to date. The CEO of StatSig will join OpenAI as CTO of applications, helping developers build safe AI products. StatSig will continue to operate independently after the deal, which still needs regulatory approval. Well, we've got plenty more coming up on the programme, so do stay with us. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now to some other top stories making news around the world. Donald Trump says that the US military has hit a boat that was allegedly carrying drugs from Venezuela, killing 11 people that he described as terrorists. Video shared on social media by the US Defense Secretary Pete Hegseth shows a boat speeding across unidentified waters before it's hit by a missile and bursts into flame. Now, last month, the US Defense Department announced that it was sending 4,000 sailors and Marines to Latin America waters to tackle the drug trafficking. Elsewhere, Bloomberg has learned that Jane Street has made second quarter net trading revenue of $10.1 billion, beating all of the biggest banks to set a Wall Street record. Sources say that the sales figure is more than double that of a year earlier and pushes Jane Street's first half totals to a record as well. Trading volumes have been elevated as investors rushed to reposition portfolios around Donald Trump's tariffs. And here in the UK, a group of Thames Water's senior creditors has submitted a new operational plan to the UK regulator as part of its bid to rescue and take over the ailing utility. The proposal includes revised measures to reduce pollution and leaks through the replacement of older water mains. The group is also set to finalise a revised proposal to restructure the firm's finances. And staying in the UK, Jaguar Land Rover said that a cyber attack has severely disrupted its retail and production activities, dealing another blow to the UK automaker that's suffered from higher US tariffs. The manufacturer of Range Rover and Land Rover sport utility vehicles, owned by India's Tata Motors, said that the intrusion forced it to shut down its systems. Well, those are some of our top stories this morning, but coming up on Daybreak Europe, we'll head back to China. President Xi Jinping parading Beijing's military power and its diplomatic clout with a display of its latest weapons. Leaders including Putin and Kim Jong-un in attendance. We'll get you the details next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. President Xi says that China is never intimidated by bullies as the leaders of Russia and North Korea join him at a major military parade in Beijing. President Trump says that they're conspiring against the US. And global debt slump. Japanese 20-year yields hit their highest levels this century as the wave of worry over government deficits washes around the world. Plus, Chrome, sweet Chrome, Alphabet shares, I should say, surge after Google avoids being forced to sell off its web browser. But it's told it must share its search data with its rivals. Well, let's get to some breaking news across the terminal out of Hong Kong. And this is the story that Hong Kong probes are alleging insider trading by staff at the Hong Kong Exchange. Now, the details here, we are seeing that they have the city's financial regulator as well as brokers and social media influencers being involved here. Authorities investigating whether the regulatory staff at these two organisations have tipped off traders and others to upcoming announcements that have involved dozens of listed companies over several years. Now, this is according to people familiar with the matter. We report that the probes have been ongoing for months, and notably such an investigation could take years, and it may not result in charges. So we shall keep across that story, but the redhead just crossing the terminal. Let's get a check on these markets as well, shall we? If you're just joining us, it's 6:31 a.m. in London, and we had warned you that it could be a sour September. So it is proving in these markets. Stocks and bonds sliding yesterday. Tech shares under particular pressure stateside. European stocks falling the most in a month. And now you have Asian shares catching up to that negativity. But European futures pointing higher, at least when it comes to Euro Stoxx 50 futures and S&P futures as well. FTSE 100 futures, though, tilted to the downside. But when you listen to the likes of UBS and Morgan Stanley, buy the dip is their advice. And UBS says the S&P could reach 6,800 by June 2026. But flip the board over to the cross-asset picture, because really all of the action, the main action, was happening in your bond space yesterday. And we are flirting with 5% on that 30-year Treasury yield, joining the global bond sell-off. We had seen, as Valerie Teitel was highlighting for us, long-end gilt yields at the highest this century, since 1998 yesterday, as the pressure mounts on Prime Minister Keir Starmer to manage the budget. The pound tumbling as well. Again, a pressure valve for investors. So you're looking at cable now at a 133 handle. And Allianz's Ludovic Zubran telling us yesterday the Chancellor, Rachel Reeves, needs to guide the bond vigilantes. So we await to hear from her. But also keep an eye on commodities. We had the London Metal Exchange having an unexplained lie-in this morning, a 90-minute delay to the start of trading, just by the way. But the debt fears, plus the Fed cut bets, pushing gold to record highs, coming off a touch now, down just ever so slightly, but oil steady here as traders weigh the geopolitical risks. We're at $68 a barrel on Brent. But let's get back to the geopolitical story. Chinese President Xi Jinping hosting world leaders, including Russia's Vladimir Putin and North Korea's Kim Jong-un, in Beijing for a once-in-a-decade military parade. Now, the event is the first public appearance together for Xi, Putin and Kim, a signal of their willingness to coordinate more openly and challenging the US-led global order. And Bloomberg's China correspondent Min Lo, has been across it all for us. Min, good to have you back. We've had President Trump accusing Xi of conspiring against the US, but sending his warm regards to Putin and Kim. This military parade as well, commemorating the end of World War II. But is it more about showing how much the world order has changed since then?
Yeah, it has. I mean, you look at that image, an iconic image of Kim and Putin flanking Xi. They are forming this axis of unity, challenging the international-led world order in some ways. And I guess if you talk about how the world has shifted this week alone, for Kim, it is his first foray into international diplomacy. It is potentially a groundbreaking moment for him, especially if it leads to a gradual normalization of his rule globally, if he does restart nuclear talks with President Trump. That's something Trump has indicated a willingness to do. He said he's willing to meet with Kim, and South Korea even said they would be happy to host the two men, perhaps at the sidelines of the APEC summit. And it's interesting that Kim toured a new missile factory in North Korea just ahead of this trip to China, perhaps trying to cement his status and North Korea's status as a nuclear power and an irreversible trend at that as well. And of course, you look at the closer ties between Putin and Xi, a relationship built upon strength, both sides agreeing to build a new pipeline that would involve China buying a lot more gas from Russia. Also, the issuance of free visa for Russians, or visa-free entry for Russians on a trial basis as well. Suddenly, we are seeing the political alliances shifting or strengthening in this case. And it'll be interesting to see whether it opened the gates for Trump to maybe think about how he would like to engage with Kim Jong-un, and whether, you know, it would be opening the path towards a reduction of sanctions for a country that have for such a long time been isolated from much of the world.
And Min Min, it's not all about the optics, is it? We have a great piece on the terminal about how you can actually trade the military parade. Tell us more.
Yeah, of course, you can trade some of these state-owned companies, the big developers of these aircrafts and bombers and ships as well. And you look at the CSI National Defense Index this year, it's been outperforming the benchmark CSI 300, up about 22% this year. We did see today it fell by about 3%, which our analysts believe is a bit of that selling on the event and profit-taking that is going on, especially given it's rallied quite a lot in the months leading up to this. But certainly, defense had been a big theme this year alongside AI. That is the big theme this week in particular, with Alibaba's earning really lifting the chip stocks. And you might think that that might cause people to rotate away from defense, but that's not true. According to our analysts, we are seeing the broadening of these exposure into defense stocks because AI is very, very closely linked with defense as well. At the parade today, we saw these uncrewed vehicles, four-legged combat dogs, as well as optionally crewed ships, uncrewed aircrafts flying in formation, and all of it tells you that China has been experimenting with using autonomous systems in its defense as well. And that's why we're seeing a lot of interest flowing into defense stocks. About a third, more than a third of the ETF inflows this year has been into defense-related themes.
All right. Thank you so much, Min Min Lo, for all of your coverage of that. We look ahead to the parade. Our China correspondent, Min Min Lo. Now, on the geopolitics, if President Trump was feeling a little FOMO, a little left out of all of what's been happening in China, he's got a visitor coming to the White House today. Karol Nawrocki, the Polish president, who'll be meeting with the president. And it might ordinarily showcase Poland's importance as a key European power. But the run-up to the head of state's first foreign trip perhaps has exposed something else, how Poland's latest political troubles risk undermining the country at home and abroad just when its start was in the ascendancy. Bloomberg's Piotr Skolimowski has been writing about this. He joins us now for more from Warsaw. Piotr, good morning to you. We've got this meeting scheduled for 11:20 a.m. New York time. The Polish defense minister saying that the US may boost its military presence in Poland. What's on the agenda for this visit?
Hi, Lizzie. So indeed, the main focus for the trip is going to be U.S. troop presence in the U.S. So what we've seen, it's an important visit, obviously. Karol Nawrocki has just taken the presidency. He won. It was a shock victory for him in June election. He won endorsement from Trump, as a matter of fact, just before the election. U.S. One of the U.S. administration representatives was in Warsaw in a week in the run-up to the second round of the election, literally calling on people to vote for Nawrocki. And what's important in this trip is that U.S. has deployed 10,000 troops to Poland after the full-scale invasion started of Ukraine. Now, what we know is that at the end of September, U.S. will review troops' presence in Europe, and the concern is that some of the troops will be pulled. Now, Poland has received some assurances from the U.S. that it won't happen and it won't affect Poland, but it's crucial, and it's something that's really in focus for everyone here, and that's what Nawrocki that's the message he's trying to bring to Washington, and kind of leverage the fact fact that Trump has really gotten what he wanted in Poland when it comes to presidency. Another thing, and here is where the tensions sort of rise, is that the question is obviously Ukraine. Nawrocki has been very skeptical. He during the campaign, he very much said he's against Ukraine's presence or membership of the EU and NATO, and that's what puts him at odds with the government. And what Europe needs is unified message on Europe, on support and encouragement for Trump to support Ukraine. And here the question is whether Nawrocki is going to deliver that message to Trump or not.
Well, before I get back to the latest on Ukraine, Piotr, you've got a rate cut expected in Poland. Just take us through what we're expecting for that decision.
Yes, indeed. So the Polish Central Bank is going to cut rates, or that's the expectations from the economists that we've polled, by 25 basis points, which be a continuation of a rate cuts. We had a surprise rate cut in July when the central bank sort of resumed its easing cycle, although it won't call it a cycle. It's basically an adjustment to the fact that inflation is finally below 3%. The target is 2.5, so we're getting close. But it's probably likely to be a final rate cut this year. The government has been raising, the central bank has been raising certain issues, like, for example, very expansionary budget policies, which obviously could boost the inflation down the line. So that's something that might give the central bank a pause going forward. At this point, we're expecting a rate cut, but probably the last one for this year.
OK, Piotr Skolimowski, we thank you so much for setting us up for that decision. Europe's defence sector ramping up production, one German company coming up with a cheeky way to introduce itself to young job seekers. Defence giant Rheinmetall has been handing out, and I'm going to warn you that this is going to surprise you, it's been handing out condoms embossed with the company's name and the message, safety counts, always and everywhere. Our equities reporter Chloe Mele has been following this for us. Chloe, is this just a gimmick or is it a sign of changing times in the defence industry?
I do think that it is both, but it is definitely a sign of changing times. We have a situation right now where we have this defence spending being unlocked across Europe, which is obviously a massive opportunity for those defence companies, but then also a massive skills shortage. And when we think about the ageing workforce in that sector, in that industry, a shortage specifically of young talent. So this defence sector is trying to appeal to those young workers and coming up against some key challenges. Of course, the fact that young people that, for example, have engineering degrees or AI expertise, those young people also have opportunities in the tech world, for example, or the finance world. So the defence sector has to compete for those young job seekers in a way it hasn't had to do before.
And the problem is really all about the lack of young workers. Is it also a lack of female workers, as you might expect in the defence industry? Maybe that links into the lack of young workers.
Yeah, it does. It does definitely feed into that. And there's still that perception of the defence industry as being maybe this old man's club, that the defence industry is trying to change it a little bit. It's also the perception of this as, obviously, this is a sector that makes weapons, instruments of destruction, and that is not something that sometimes young people necessarily want to be involved with. So that's another challenge there for that defence sector in terms of revamping that image.
So talk to us about these novel ways that Rheinmetall is trying to attract young talent.
Yeah, so defence companies across Europe, they're thinking about, for example, making their pay more competitive. That's one of the key things. We're thinking about that, purely marketing thing of the Rheinmetall condoms, but then also new perks. So, for example, we heard about yoga classes or language courses, ways in which to make itself kind of more attractive, more appealing to young workers and make itself seem like less of a very serious industry in a way. OK,
Bloomberg, Chloe Mele, we thank you for that. Not what I expected to be talking about at 6:44 a.m. on a Wednesday morning, but there you go, Rheinmetall's condoms. Coming up on the programme, how Nintendo proved doubters wrong with its stubborn focus on fun. We'll take a look at the success of the Nintendo Switch 2 next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, earlier this year, Nintendo was under growing pressure. It had been 8 long years since the release of the original Switch, and profit had tumbled more than 40%. So when the Switch 2 finally arrived in June, some critics initially panned it as little more than a modest upgrade. And yet it went on to smash sales record, and it looks to dominate this Christmas. Nintendo's big win is the subject of today's Bloomberg Big Take, and I'm pleased to say our senior editor, Ritsuko Ando, in Tokyo, joins us now for more. Good morning. I have to admit that I haven't been a gamer since about the mid-2000s, so you're going to have to explain to me what's so special about the Switch 2.
Okay, well, compared with the original Switch from about 8 years ago, it has a slightly larger screen, improved controllers, but really, for the large part, as you mentioned, critics say the console is basically building on the original Switch. Sure, some fans are buying it for some new games like Donkey Kong Bonanza, and they do say that titles like Zelda are much more advanced visually, but overall it does seem like much more of an upgrade than a groundbreaking advancement, which actually makes the record-breaking sales all the more remarkable, because it shows you that, you know, for fans, slightly better and newer games are good enough.
Yeah, so talk to me about Nintendo's strategy here. What is it about the company that's made it so successful?
So Nintendo is really interesting. In some ways, it's so stubbornly old-fashioned. I'm not talking about how Donkey Kong and Super Mario have been around for decades. This is a company that really doesn't care about market expectations or the latest tech trends, including the popularity of like violent shooting games, or this shift that we're seeing towards mobile gaming. It just really concentrates on making fun or funner games. So in some ways, it's so traditionalist. It's quite radical.
And what's next?
What's hard? It's a bit hard to say, but yeah, you have to agree that it has a pretty good track record of keeping fans, surprised, keeping them happy. That said, it's not like Nintendo's never had any flops like the Wii U back in 2012. Also, well, Nintendo's kind of largely ignoring mobile gaming. This is where the growth is. There's a whole generation of youngsters in developing markets who can't afford a $400 console, and they're used to playing games on their smartphones, and that's going to really fundamentally change how they use their time and money going forward. So that's worth thinking about for Nintendo.
Okay, Ritsuko, thank you so much for bringing us the big take. Ritsuko Ando, I did not expect to be going from condoms to Donkey Kong this morning, but there we have it. We've done it. We've got plenty more, though, coming up on the programme. Whatever could be next? This is Bloomberg.
The Chinese nation is a great nation that is never intimidated by any bullies and always values independence and forges ahead. In the past, when faced with critical struggles between good and evil, light and darkness, progress and reaction, the Chinese people rallied together to defy the enemy.
So the geopolitical wind shifting, and meanwhile we've had the stock and bond sell-off. Let me focus on the bond market action yesterday. Really, what's interesting here is the sell-off concentrated at the long end of the curve. So in your white line, you've got the 30-year yield on Treasuries, the blue line, the 10-year yield, and you can see that divergence between the two. The action really starting in Europe, spreading to the US, and now into Japan as well. We keep an eye on that. When European yields get going, we have all the pressure on Keir Starmer, of course, here in the UK to give some clarity on his budget. Yesterday, we had the 30-year gilt yield at its highest since 1998. But meanwhile, if you flip the board over, have had lots of auctions as well. The yields pulling in big orders, as you can see. The backdrop, of course, is all of the economic data that we are getting. Today at 3 p.m. London time, we'll get that latest US JOLTS data ahead of the real focus of the week, the pay payrolls data on Friday. And it's all setting us up, isn't it, for the Fed decision in September. The bet's building that we'll get a cut this month and maybe more to come later on. Flip the board over one more time, and that optimism on Fed cuts pushing gold to its biggest surge since the 1970s. So we keep an eye on that. Let me take you through the other data that we've got coming out today. As I mentioned, we have the JOLTS numbers coming at 3 p.m. London time. Before that, at 8:30 a.m., we'll be hearing from the European Central Bank President Christine Lagarde. She'll be speaking in Frankfurt. And then at 7 p.m. London time, we get the Fed's Beige Book, expected to show economic activity slightly increasing in the latest version in mid-July, but sentiment much weaker than at the start of the year because, if you guessed it, tariffs as ever. But coming up, we've got plenty more on Bloomberg TV for you. M&G reporting earnings in the next few minutes. The CFO will be joining Guyana and Tom on the opening trade at 7:40 a.m. London time. The opening trade coming up next. This is Bloomberg.